What's up, YouTube? Back with another video. Um, Decided to drop this video. It's kind of like a two, three in one kind of a thing. Essentially, we will be doing analysis for Friday. Essentially, I dropped the TikTok, but I actually wanted to go into depth with it on YouTube. I want to drop an analysis on Friday. I lost on Friday, but I wanted to see, but my setup was still there. And I just wanted to talk about that kind of like how do you recover from things like that and whatnot. Number two, it was asked in my last video or the video before that, I believe that what were my trading view indicators and settings as well. So I'm definitely gonna go through all of that as well in this video to kind of put that out there for y'all. And then lastly, we're just probably just gonna have like a quick, back testing, maybe like back test two or three sessions. Nothing too long, nothing too crazy. So yeah, let's get right into it and see what we got here for y'all. Okay, so boom, right? This was kind of what I wanted to talk about on Friday. Friday was a very interesting day. So on Friday, I actually lost. Virgin, if you go back and watch the TikTok or the trading recap, you should see why I did low. But I lost. I tried to take the same trade like three times. Basically, I got manipulated. But originally, the other reason why I lost was because my original entry, I missed it. I wasn't paying attention, and the thing is, the entry happened like almost instantly at market open. So I kind of just was hesitant, and then after that, I just wasn't patient. I jumped into things, but we can go over it right now, right? So here, right, obviously the way I start my day, obviously each week I start with the 4 hour daily. Each day I kind of start off with the top to bottom as well. So assuming we went through the 4 hour daily, I could just see, we have a lot of gaps to fill in, essentially, or liquidity points. On the 1 hour, or let's go to the 4 hour. Like I said, let's start from the 4 hour. We have this 4 hour gap here that just hasn't been filled. That I expect price to come and fill this section of space as well. I expect that to be tapped into. So a huge 4 hour gap as well. Then this was the 4 hour ultimate swing low. I call that the ultimate swing low because that was the lowest point since our last swing. Because I could see after that we had that gap up after, the tariffs talk and whatnot, and then we started a little bit of a downtrend. This was also a very important swing low because this kind of indicates to us potentially a break of structure and where we might be able to see bearish nature coming from Nasdaq overall. But I still was kind of bullish, but bullish in the sense that maybe long term we're bullish, but in this week, after seeing all of this kind of like bearish nature, I was pretty bearish. So and then go into the 1 hour. Obviously, I'm looking for more things on the 1 hour. Not really much to go off of really on the 1 hour. Just know that this is huge, huge imbalance on the 1 hour here. But I didn't see price. Obviously the nice thing would be price kind of bounces up and get there, but we also tapped into this 1 hour imbalance as well. So I do expect us to just go lower. So and then I kind of started off my day. Well, not my day, but just according this is like analysis essentially, right? We look at Asia and London session from Thursday into Friday. It's just accumulation, right? We kind of just sat in this box, this area, bounced into it. We didn't really have much. It was a sideways market essentially, right? And so with that sideways market, we need to see changes so that we can see if there's a direction that the price wants to go or there's a direction that market was looking to go. So we have this accumulation zone, it kind of bounces around and then boom, we have this breaker structure which I marked right here. I have this breaker structure right here, right after this accumulation zone. This breaker structure is very important because it lets us know, hey, it's time, right? We're making our next leg down. This is the 15-minute chart, mind you. So we're making our next leg down. That's what it's letting me know, right? So now I've kind of got that like big picture idea that okay, I'm definitely bearish, right? I'm bearish, obviously not married to my bias, but I'm highly convicted that we're going to be bearish. I dropped to the 5 minute. 5 minute lets me know I've gotten a story from the 1 hour and the 15 minute. 5 minute kind of lets me know when to get ready for my entry, which is on the 1 minute. My 1 minute is my entry trigger. 5 minute lets me know when to get ready for the entry. Come here on the 5 minute. If we zoom in, right, you can see here on the candle that broke structure on the 5 minute, we also created a wick back into this body. This is a rejection wick. This rejection wick is pretty important because um if you trade Powell, then you would know how rejection blocks work. They're just an area in market, right, where you have your fucking candlestick, and then you got the wick. That's so ugly. I'm so sorry. But you have the candle and then you have the wick, and then it's usually like a swept. It usually like sweep something, kind of like it swept a liquidity point essentially. So this would, and then this area right here would be the rejection block right here. This wick would be the rejection block. Why? Because then you want to see price kind of tap into it, and then after price taps into it, you want to see price kind of reject out of it. That's just usually how like the rejection theory works, and that's what power trades. I used to trade that as well, so it was kind of nice for me to kind of know that information and implement it with my strategy. This is why obviously knowing too much information can harm you, but if you know how to apply too much information, then you're able to reap the rewards. So boom, I seen this rejection entry, and then we had a retracement. Technically, in my old trading style, this is an A plus setup. I immediately short right here, put my stop at the top of the rejection wick right here, like two points, and then just target high RR. That's just how power works. But obviously, I can use this to my benefit of using my inverse mech model. So we had the retracement, boom, and this all happened. This is like London session into pre-market, mind you. So that's what makes this very important. So I'm not awake for this clearly, but obviously looking at this, it's classic price action, right? So boom, we are able to get that rejection wick, and then we consolidate a little bit more on the 5 minute. This is where we start getting ready for market opening. Now this is very important. This is where I'm going to zoom in even more so you guys can see, right? Here we have a 5 minute fair value gap that was created with this candle and this candle. This three candle sequence was our fair value gap, bullishly made, right? Now, as a reminder, my bias is bearish. So what am I looking for to get an A plus entry? I need an inverse fair value gap in the direction of where I'm taking my trade. Meaning I need this fair value gap to get inversed, and then I need a 1 minute retracement as well as a 1 minute EMA being below or above the EMA, whichever direction I plan to go. And then that's my trade. So boom, we had this 5 minute, and then also I'll come in on the 3 minute just so you guys can kind of see. We also had this 3 minute right here, stacked inverse fair value gaps. It just makes it more powerful when you have stacked PD arrays, when you have stacked imbalances. It makes the analysis more stronger. So with those stacked PD arrays, I genuinely knew like, yeah, we are definitely gonna be, definitely gonna be bearish, and that's kind of what I'm looking for here, right? Sorry, my mouse just is a bit too slow right now. Okay, there. So boom, stacked inverse, and I marked that out right here as well for market analysis. So now I know this is a very key. This is a key point. And then on top of that, we kind of made, somewhat of a resistance, right? I don't want to say this level because it kind of slipped it, but let's say this level kind of. We kind of see those equal like stacked up highs kind of being made, and this was also resistant because it was a rejection wick as well. So this applies as a resistance as well. So boom, we get that. Now this is me on the 5 minute. Now I know the story. I know the story from the 15 minute and the 1 minute. I know now I'm supposed to prepare. Why? Because we were able to create a fair value gap. Now I needed to get inverse. Let's go into the 1 minute. Let's take a look as to what happened specifically on the 1 minute. This is where things get important. So we made the fair value gap. This is the area essentially where we made the fair value gap on the 5 minute and the 3 minute. So I'm looking for this to get inverse, meaning I need price to kind of close below this. This happens right here. Price has been inversed. Now, this lets me know to get ready on the 1 minute for my entry trigger. What is my entry trigger? I have two entry triggers. I have the first entry trigger where I retrace back into that inverse fair value gap completely, meaning I tap right back into it, right? But sometimes the way price has been, Nasdaq is very strong, and especially because I use ES as my correlating pair, I am sometimes able to make an earlier call instead of waiting for the retracement because sometimes it moves without us. As long as you should always have, as a trader, you should always have ES at your side. It helps you determine the trend. It helps you determine directional bias even better. So it kind of let me know, okay, I can kind of get in early. Why? Because I used my second entry trigger. What was my second entry trigger? I wanted a 1 minute retracement and rejection off either the 20 EMA or the 50 EMA. Now for me, the colors here, the 20 EMA is the red line, while the 50 EMA is the orange line. As you can see, price blasted through the 20 EMA, but that's fine. The closer to the inverse fair value gap, the better. Still, I'm still waiting for my entry regardless. Either entry works for me. It hit the 50 perfectly and it closed, rejected. It then opened here and still tried to get through the 50 and it rejected. Why did I take this entry? Because I knew that once I seen the first wick of rejection, seeing another wick, this is where market intuition comes into play, right? Normally you think, okay, strict to rules, I should have waited for candle closure. And to be fair, if I had waited for candle closure and entered here, regardless, it's still a winning trade. But the reason why I traded this aggressively was because I had an A plus setup lined up. It was A plus. I had a trending market. I had a directional bias. I had a key level to target. I had liquidity points, and I had a PD array that supported it. So I was ready for all of that, and then we had the 1 minute EMA tap as long as rejection. With that rejection, that's my entry. Okay, cool. I enter here, have my stop at above the 50% of the inverse fair value gap. And the reason why I did that was it's more of a gamble, but I was also trading one mini on a 50K account, and that was about $500 of risk. And so it was a bit too aggressive because if price did want to retrace into that inverse fair value gap, then I'm screwed. But it's also conviction as well. I love the EMAs. The EMAs being under the inverse fair value gap, being under the inverse fair value gap is really important to me. And then I just targeted my liquidity points, TP. This would have been, if I was trading micros, this would have been TP1 and this would have been TP2, right? And obviously a lot of people they like to trade, and then leave runners as well. So now here's a very important thing that I would like to note out as well. This is where you learn how to trade continuation. If you see here, I have a marking right here and it says bearish SMT on the 5 minute. Let's jump to the 5 minute and let's take a look what the 5 minute looks like here. Looking at the 5 minute, here we made equal highs. Okay, why did I mark that as a bearish SMT? What happened on ES at this time? Let's look for the marker. Where is it? Right here. Boom. SMT divergence. This is going to get into my trading view indicators and settings, in which I'm going to provide right after this. I had an SMT, a bearish SMT created. We made equal highs, equal or lower highs on NASDAQ, whilst ES made higher highs, showing incline for bearish nature. What does that SMT also tell me? That we are inclined to continue the bearish trend, even though we've already taken out the first liquidity point. We are not ready for a reversal. And so, being a trader, right, if I seen this and I'm at break even, I'm definitely not trailing my stop because I know that price is going to continue lower. And what did it do after creating that bearish SMT? Continue lower. And we were able to target the ultimate swing low. This is why good market intuition alongside with good market analysis and fundamentals is important. I definitely want to, invest into a boot camp for you guys so you guys understand more. But understanding the fundamentals is very, very important. If you want to learn the fundamentals, go to TJR. He has a huge boot camp. He'll teach you everything you need to know about ICT. Go to Justin Werland, for an example. All these different content. Just get the fundamentals and then apply your strategy. Because I knew the fundamentals, because I knew I had an SMT, this would be a continuation play. And obviously, this is not the trade I took because I missed it. In fact, I tried to enter here upon this rejection. This is where I thought the continuation was going to occur after the liquidity sweep. And I got murked. And then I tried again after seeing this rejection. I got murked again. And then it finally reversed. And the mistake on my part is that I didn't wait to see a proper rejection off the 50 EMA after seeing price comfortably close above the 20 EMA. I saw it close out the 20 EMA. I said, okay, fine. I'm going to enter here. No. It wicked the 50, showing it doesn't like the 50. And then this was after the bearish SMT. I could have entered here, and this could have been my trade. I could have targeted this liquidity, or I could have targeted this again. And that's what I should have done as a better trader. And these are the things you have to learn. These are the practices you have to exhibit. If you don't understand these certain things, you're just gonna keep, fucking around and like, missing out on A plus entry. And this literally, this is an A plus. This is an A plus setup. It had everything I needed for my strategy. A plus on Friday, right? Friday was manipulated. If you saw my TikTok, I said it handled me because it manipulated me. But it only manipulated me because I came late. And I'm not mad at that. Why? Because I know my strategy works. I know it works. It worked instantly when market opened. I could have been off the charts in the first 5 minutes of market. So, but That's fine. I'm not mad. I lost money, yes. I overtraded one of my evals, and the other eval I lost money. That's cool. That's fine. But I know that I know what I'm doing. So there's that as well. Okay, so now moment of truth, which you guys have been waiting for. My trading view indicators and trading view chart settings essentially, right? So currently I pay for the plus. I might downgrade again until I get a payout as well, kind of like a discipline kind of thing. So I'm currently trading the plus, and I have to buy market data. It depends on what prop firm you're using. Sometimes they're not linked with trading view. I forgot what it is, but market data is important. Essentially, so it was like $7 a month, which is cool, but you have to get anything higher than, I think you have to get like essential or something like that. But cool. Let me not waste any more time. So essentially, I have four indicators, but I would say two of them are most important to my strategy. I have four, but two of them are most important, and I'll get into it. So the first important one for me is the EMAs. I I actually made this. This is my script. Here's my settings right here. These are the colors. Da da da. Oh, sorry. It's a Pine. It's actually a Pine script as well. But essentially, for this, let me open this up so you guys can see it. I have the 9, 21, 50, and 200. I don't use the 20. I use the 21. It's a bit of a preference thing. It's not really like it's da da da. Actually, I'll change the name right now so that you guys can see it. I don't care if you guys use it as well. Definitely, this is the source code. It's so easy. You could definitely just replicate it as well. But that's literally it. It's the 921 and 921, 50, and 200. EMAs are really important. They're just statistically really good for retracement. They're good key points to watch out for. It can help you with support and resistance. I feel like EMA should be applied to any strategy you use. Use the EMA as a supporting entry trigger. I once I've discovered using the EMAs as an entry trigger and not just like an idea separate from itself, my trading has taken to a whole nother level. So we have the EMAs, then equal highs and equal lows. This is very, very, very important. It's very, very important. Let me put this in my favorites. This is so important. And the reason why I say this is because this helps you avoid getting stopped out. If you look here, look really closely. Let's go on to 1 minute so you guys can actually see this very closely. Here, I marked out equal highs as danger. These two candlesticks had equal highs. I marked those out as dangers. Why did I mark that out as danger? Because I'm letting myself know price possibly can come back and take out this equal high, and I can possibly get stopped out. Equal highs at equal lows statistically have been like the highest rate of getting stopped out. Like if you go, I want you to go back on your charts. I want you to see a lot of trades where you've gotten stopped out, you got missed. 9 times out of 10, it's either because an internal high or internal low hasn't been taken, and it was taken when you placed your trade, or you had an equal high or equal low. Aside from that, the other few percent is because Nasdaq, the market moves the way the market moves. But besides that, equal highs and equal lows tends to screw you over. That's usually the highest percentage. Trust me. I've been doing this for a minute now, and I've seen it as well. Other trading mentors have said the same exact thing as well. Next thing I have, and now this is like optional. This is only starting out. I have this because it helps, right? Fair value gaps. If you are a trader, you should know how to draw a fair value gap. It's a three candlestick formation, and there's a gap between the bottom of the third wick and the first and the top of the first wick, and vice versa. If it's bearish, you flip it. What This is a fair value gap. I'm sure all of you guys knowing. If you're new to the channel, if you're new to trading and you're watching me, search up, ask ChatGPT what is a fair value gap, let it describe to you, or go to TGR's bootcamp. But that is what a fair value gap is, right? Now you must be thinking it says fair value gap, inverse fair value gap. What I use this for is for bigger time frames. I sit on the 5 minute when market is live. When I'm getting ready to trade, I sit on the 5 minute. I'm nowhere else. I have done my analysis top to bottom, so I've marked out my key levels, but I'm on the 5 minute. The reason why I have this is because I'm on the 5 minute, I only turned on the inverse fair value gap for the 15 minute and the three. Sorry, not for the 15 minute, for the 5 minute and the 3 minute. That's why I have inverse fair value gap. Sorry, it's like worded weird as you can see, but I have for the 5 minute and the 3 minute. Those are only inverse fair value gaps I am paying attention to. Nothing else. So as you can see here, what's marked out? A 5 minute inverse fair value gap. Marking this out for me, sometimes I tend to miss things. That's just the way it is. Sometimes I can't always be flipping through time frames and jumping here. Oh, well, this, that, and the third. I can't do that. So I just sit on the 5 minute. It works. My trading has been way more healthier when I sit on the 5 minute and I enter on the one, using the stories of the 15 and the 1 hour. That's literally just the way it's been easier for me. Simplify your process. Simplify your system. If you can do that, you can focus on scaling up and making money. I've already dropped my video on how to make the previous video on how to make 50,000. You make your first 50,000 a month. You just need to have a simple system, risk management, and good psychology, and I promise you, you will scale up and get to what you need to get to. Obviously, it overcomplicates. There's obviously little factors here and there, but besides that, if you get those down, you can see the strategy works. It's not like it doesn't work. It's how you execute live. So I had those. I have those to mark out for me because I tend to miss it. Obviously, when my trading view downgrades in like 2 days or so, I'm probably gonna have to only stick to 3 indicators. I may be wrong. I may be wrong. I hope not. I feel like 4 might just be enough. But yeah, those in terms of importance, it's first the EMAs, then the equal highs, then the fair value gap and inverse fair value gap. Flipping through time frames, I hate it. It doesn't make you look cooler. I know you see all of these things on YouTube, all of these gurus lying to you like, oh, I gotta jump here, I gotta jump here. Bro, get your story. You're a scalper, right? Sometimes seeing everything is going to fuck up your trading. Sometimes looking at everything is going to mess up your trading. That's just what happens. You don't need all the information in the world. Sometimes you just need a little bit. Get your quick money and get out. This whole trade, by the way, if I were to take this as a swing trader, this shit was 700 points. This was 700. This was a 700 point move. Why would I need any of that? I would have been out of the trade from this tick to this tick. 25 points maybe, 50 points maybe. The reason why I'm able to see this whole trade play out the way it does, because I'm looking at everything. I don't need to look at everything. I'm trading one mini. I can make my target in that, and I can lose my loss limit in that as well. Get exactly what you need to get. You don't need all these fancy indicators. You don't need all this crazy shit, man. Simple stuff that aligns with make your trading easier. Indicators aren't meant to be like it's not meant to be the main driver. It should make your system easier. Makes the process 10 times easier. That's the only thing it's supposed to do for you. Nothing else. That's all it's supposed to that's all it's supposed to do. So there's that. Sorry. Teacher texted me. Yeah. Or emailed me, sorry. Lastly, I have SMT divergences. Smart SMT, smart SMTs are under SMCs, smart money concepts. SMTs are very underrated. Because of the government shutdown, we've been having a lot of random divergences between ES and NQ. So SMTs have been losing their quality because of the government shutdown. But when it comes back, when the government shutdown comes back, when the government is back on, when the markets are on and normal, we're getting normal macro news, there are things happening, and the market is moving with its regular volatility, the SMTs are such easy indicators to let you know where they are. The reason why SMTs are so important is because remember how I said when you're trading, try and have ES side by side so you can kind of get an idea of what direction it's going. The SMTs tell you what's about to happen 8 times out of 10. They let you know ES is preparing to go lower. So you should go lower. ES has just taken out its liquidity. It's just taking out its liquidity and it's getting ready to go to reverse and go in the direction it wants to go to. It lets you know NQ may not take out that high, but we are about to go down. We're about to go up if NQ has not taken the low, etc., etc. SMTs, I can't stress this enough. SMTs are so underrated. Sometimes if you don't know what to do, you can keep your strategy so simple just based off of SMTs. You just have an SMT, do what you have to do, make your money. You're chilling. right? Everything is not black and white. You have to stack up other things, other ideas as well. But SMTs get you exactly where it gets you right there. Sometimes I've had strategies where all I needed to rely on was SMTs and price action. That was it. As long as I seen an SMT, I would take it. And I promise I still had a 60% win rate with SMTs alone. The higher time frame SMTs, even more value. Use SMTs. But the reason why I put them last is because you don't need it. SMTs is not a part of a required confluence for me. SMT lets me know my A plus setup has turned into an A plus plus. It's let me know like, please take this trade. There's like, okay, you can take this trade, it might work. There's take this trade, it's your setup. Then there's please take this trade. That's what an SMT does for me. So you won't see me. I will always have it on because I can also spot it myself. But like I said, sometimes I have ES like in the corner like this, and I'm just looking at NQ's price action. I'm making my system easier. How do I make my system easier? I have an indicator that lets me know that ES is preparing to do X, Y, and Z, and I'm not about to walk around, stressing out about stuff like that. So those are my indicators. Honestly, in terms of my trading view, settings, nothing too technical. I guess I'll just go through it. Just why not? I guess I'll go through it quickly. This is the color as well for the body. It's just the one, two, three, four, the fourth blue. Color blue, black, blue, black. Simple as well. Electronic trading. I'm on the East Coast, so I go by actual New York timing as well. Um, Status line. I don't think you should be touching that in my opinion. Scales and lines. This is what I have. You can pause the video. You can kind of, take a look, pause the video, look at this as well. Date format, 12 hours. I don't like the 24-hour format. I have it on my MacBook. Don't know why, but I feel like one day I might need it. Canvas, I use a gradient, so it's a shade, as you can see. That gray, so it's third to last, and then fourth to last, or fifth to last, sorry, for the gradient. Nothing too crazy. You could pause, check it out. Trading, buy sell buttons. I don't have one click trading. I feel like that's just a setup. You should always have confirmation. Execution marks. I turn those off, and the reason why I turn off execution marks is because it gives me it's just me, but it gives me psychological pressure, and I don't like it. I don't know how to explain it, but I lose a lot more trades when my execution marks are on. I don't know why. It could be a coincidence, a psychological thing, but like I said, as a trader, you should know what works for you. And execution marks do not work for me. Alerts, events, nothing too crazy. That's genuinely my setup. And then obviously I have the two set up for ES and NQ. Have a watch list of the stocks are the futures I like to trade as well, or I like to pay attention to for information. I have gold up. I have micros whenever I want to trade micros. You should always have micros. In fact, I suggest as a 50K account, you should be trading micros and not minis. I trade minis because I am scaling up aggressively. I'm tired. I have gold as well. Gold is a great safety asset that allows for confluences. YM. YM operates just the way ES operates for NQ as well. So you can use YM's SMTs as well. YM's SMTs are nice. They're less value because they're not as correlated as ES are, but they work just as well. You have the dollar. Dollar is important. The dollar is very important. Please pay attention to the dollar. The dollar lets you know sometimes where if price is continuing in a direction, if it's reversing, dollar helps. I have yields and euros. Those aren't really important, but it's up to you. But yeah, those are my indicators. Nothing too crazy. I don't have anything crazy at all. I know some of you guys might be looking for the crazy indicator that solves all problems. I do not have that. I just have indicators that make my system easier. And once you get that, once you find that, once you get to that level, I promise you trading is gonna come like that. Okay, so now let's get a few back tests and let's see what we can find, and go from there. Oh wait, hold up. Let's keep this on. Okay. What's this? 7 p.m. Thursday, 8 p.m., 9 p.m. I believe I'm backtesting June. Yeah. Okay. 9 p.m., 10 p.m., 11 p.m., 12 p.m., 12 a.m., 1 a.m., 2 a.m., 3 a.m., 4 a.m., 5 a.m., 6 a.m., 7 a.m., 8 a.m. Cool. So now let's look on the 1 hour. We need our story. I'm bearish. Off rip, I seen this sell off. Yes, we have this hourly gap from here to here. That's very important, right? Like, sorry, let me turn this on.
Like, hourly gap, that's cool. We have that. But I'm bearish. I'm I don't I'm sorry. Like FX yeah, sometimes they're weird, but you'll get used to it. 1 hour gap here. Cool, great. We have a 1 hour gap here. Nothing too crazy. Let's make this thinner just so it doesn't look too crazy. 1 hour gap, cool. Great. We also have this I need to start favoring this, guys. My apologies. I do back test. Please don't make it seem like I don't back test. I do. I do. Trust me. I do. LOL. But you got this 1 hour here. Very ugly color. My apologies again. 1 hour here, and then we're also in a 1 hour for value gap as we speak as well. So definitely could see price, fall out of it, reject into it, whole 9 yards, whatever. So we kind of just it looks like we're getting to the 50% of that range of the 1 hour. What else am I looking at here? Currently, we actually almost had highs. In terms of liquidity, what am I looking for? So let's see here. I'm looking for this, right? We have previous day lows, right? Previous day low here. Or not previous day low, sorry, my apologies. This is Asia low. So Asia low. Boom. Nothing too crazy as well, right? Let's go look for London low. London session low. I like starting London session from 2 a.m., but I believe it's normally 3 a.m. But it just gives me more things to. So kind of London low as well as this. This would be another London low. So what I call this is low resistance London low. Low resist London low. The reason why I say that is because we have a lot of wicks in this direction. Price may not come all the way down here as well. There's that. We've got London high here, so we can write that down. Here, London high. My apologies. Right there. So I've kind of gotten my idea. Right. Let's go on the 5 minute, 15 minutes. Sorry, 15 minutes actually bullish though. So what I will say is overall I am bearish, but as of right now, from the price action I am seeing, this is a bullish trend. This is a bullish trend, as you guys can see. So this is where your bias is. You don't marry your bias. You have to be smart. Be smart. Be smart. Be smart. Let's jump into the 5 minutes so that we can kind of get started from market opening. What do we see? Do we have any inverse for value guys? Do we have for value guys? We have one here, but it's only 9. It's only about to be 9. But I'm gonna draw this out. This is gonna be very important to me. This is a fair value gap. That inverse. This is currently a bearish inverse fair value gap. So let's get that sorted. So technically, right? If this holds, then I would be holding for shorts, right? So let's see what happens, right? See price kind of, you know, bouncing a little bit. We get 920, boom. This is that 925 push. Completely inversed it. Completely took out London high. In fact, we're going straight to this 1 hour for value gap. So now I gotta be patient, right? There's not really much I can see. This has now been inversed bullish now. So this is bullish. This is bullish. It's been inversed again. So I kind of like to hold this, but we're gonna see. We're gonna see what price does. We now create a bullish fair value gap here. So in fact, I'm gonna delete this. This doesn't matter to me anymore. And this type of price action also scares me. Like it makes me not want to trade it, but we're gonna do it for the sake of the video. Um, Fair value gap. I'm marking these out for you guys. Obviously, if it was just me, I'd be able to go quicker. But because I'm trying to, help everybody understand, I'm gonna mark all these out. So now we got a fair value gap, right? Boom. We didn't even tap into the 1 hour gap yet, but let's see what happens. Now we've tapped into it, right? Tapping into this, I want to see if we are truly bearish. We've swept this high. We have these London lows. I want to see this fair value gap get inversed. That's what I want to see. If I actually like price action, right? And what happens? It gets inversed. Now this has become an inverse fair value gap, right? So now we're kind of getting into our setup. And what happens? As we drop to the 1 minute after the 5 minute close, we retrace back into the inverse fair value gap and reject it off this EMA. I'll be honest, I would enter here. Reason why I enter here is because we took this internal high, and tapped into the inverse fair value gap as well. Now, this is a very interesting stop, I will say. My stop is very dynamic. It's just normally $500 regardless. So I don't have a positioning stop here, but we're gonna do this for the video here. So let's see, where do we have a $500 stop roughly? And mind you, this is not accurate because it's not actually NQ. This is something else because I think you have to pay for the pro version. I haven't paid for that, but definitely there's a lot of discounts for that. So obviously first TP is going to be right here, but the overall TP that we're really targeting is ultimate London low, which is that 2 a.m. thing I was talking about as well. So let's see if price plays out. Okay, so we got a reversal. I will say break even for me would have been this low. I wasn't paying attention. That's my fault. You guys also should pay attention to this as well. I don't like doing this break even thing on back testing. I like just trading it out, not like a realistic sense. But that would have been break even for me live as well. So price automatically, it inversed out, it swept the highs and then came break even. So it only took out like pre-session low essentially, right? So we lost that trade. That's a back tested trade. Boom, we lost, right? Reason why we lost, price just didn't want to respect it. Price was bullish, right? Now, like I said, on the 15-minute, I'm looking at it. Yes, the 15-minute is bullish. So if this was you probably would have a bullish bias. You'd be like, okay, yes, this is bullish. I'm only looking for support to the upside, right? But after seeing this get inversed on the 5-minute, I definitely would take this trade as well as a continuation because we have liquidity down here. We don't have liquidity up here because we tapped into the 1 hour and we rejected. But we're not always going to be right. So I do want to see where price goes after this. Maybe it's because my stop was too tight. This is another important thing that you kind of have to pay attention to as well. But it looks like no, it would have still stopped me out regardless. Sorry, this didn't mean to do that. Let's just assume. Okay, so boom, it comes back into the 1 hour and it just fills it up, and not really you can do nothing you can do about price at that point. So let's assume, right, I come back for New York session, right, or not New York session, PM session, right? We've now gotten that fallout, that rejection. Cool. We filled up this. It looks like, have we inversed any fair value gaps? I don't see any fair value gaps inverse except this one. Cool. But look where price goes, by the way. This is 330. This right here, you know what? We'll play till, yeah. So this is market close right here. It still swept London low on Asia close, but I want you to see how price still came back to this point. This is what I say, that the market sometimes is manipulative. Sometimes you have the right idea, you know where prices wants to go, but you just don't fit in those plans. It happens. This is also June's price action, so I'm very not surprised. So what we're gonna do? Let's get ready for the next session. Let's see. So we're entering a Friday now. So let's see where we go here. It's 3 a.m. here, 4 a.m., 5 a.m., 6 a.m., 7 a.m., 8 a.m., 8 a.m. Right? Let's look on the 1 hour. Right now, in this section, we are bullish. The 1 hour is currently bullish. It's been bullish all day, right? All Asia session. We have this internal high right here that I'm going to mark out, right? Because we swept the London lows that I was looking for here. We didn't sweep this one, but that's the ultimate low. But we swept the London low. We have an internal high here on the 1 hour. We also still have this gap right here. So let's see if we could get that up as well. Sorry, that's ugly as shit, bro. Um, I don't know why sometimes like it feels like my tools don't work. I don't know explain. It's so annoying. But yeah, so whatever. We'll just leave that because it's not letting me gap. So we have the 1 hour gap here. So what am I bullish? I'm bullish. There's no question about it. If I drop to the 15-minute, I'm going to see the same thing. Bullish as well. Internal high. Definitely going to be looking for that to be taken as well. Let's go look for liquidity down from previous session as well. So it's 8 a.m. So what do we have here? This is Asia low. We have Asia low here. Asia low. Boom. And then what else? We also have a London low being created over here, roughly. So we'll go with that. London low. Got that. And 15 minute, like I said. Yeah, we're looking for a fair value gaps that I see right now. I do see a bullish one. So definitely, if I'm looking for a, like I said, I'm bullish. This would be a nice support zone as well for me. So I'm gonna mark this out, right? Obviously, would be way quicker, but boom. Let's see. Now we're getting close to market open, right? 9 a.m., 9:10, 9:15. What happens? Market immediately taps into the zone. I'll be honest, right? That's what I'm talking about. 9:30 open, immediately we swept the internal high, right? So now, and then on top of that, what happens as well? I know you guys might not be able to see this, but this is why you got to pay attention. We have a bullish inverse fair value gap. So if I'm looking for longs, I have two support zones. I have this 15-minute fair value gap that can get tapped into, and I have this inverse fair value gap as well. So let's look at the 5 minute. Let's see what happens. On the 5 minute, we approached the inverse fair value gap. We didn't tap into it, unfortunately, but we came very, very close. So definitely, this could be an important area maybe on the 3 minute, right? This is why I have my indicators as well. You never know what you can see. Okay, so I don't see anything on the 3 minute. It just did what it did. All right. Price starts kind of rejecting here, but we kind of have this turtle soup high immediately taken out upon tapping the EMA. As you can see, I haven't taken the trade because I can't take a trade in this scenario. We have this tiny fair value gap that can possibly be used as well. So we're gonna see where price goes here. We've just tapped into the gap, right? So now, like I said, very strongly bullish. Another fair value gap, just marking them all out. Boom, we get that rejection right around here. So we swept this. We haven't swept this level. Cool. Immediately just right? And this, I think I remember this day actually. This is just when prices shot to all-time highs almost, or it was nearing it. It didn't get to it, sorry. But cool, right? And if you see, I'm looking on the left side because I'm trying to see what PD arrays do I need to know, what things do I have to pay attention to, whatnot. But I don't see anything on the left, right? We get that retracement. As you can see, a lot of this trade, a lot of this could have been a setup with EMAs. If you trade with EMAs, you could have traded this EMA purely, but I don't. Only use the EMAs. I use other shit as well. So let's see what happens here. We have this order block here that price has just tapped into. Well, not order block, but gap. You know, right here. Now, upon seeing this, we made another fair value gap. Tiny one there. I'm not even gonna mark it out. It's too tiny. But as you can see, we're nearing lunchtime, and price has done nothing but just shot up, really. Inverse this fair value gap here. So meaning if I want to take a trade, this inverse fair value gap, it has to be inversed again. I need to see price come up above here if I genuinely want to target this as a liquidity point here, as you can see. If I want to target that as a liquidity point, then price needs to fix that. If not, then I mean, I'm off. So we're gonna go into this like it's lunchtime. We now tapped into this gap here, and now we're just wicking, lunchtime wicking as usual. I want to see some directional. Nothing directional yet. We have now made our own gap here. This is another gap. So bearish gap there. This is what you should be doing on the market. Obviously, by this time, I'm actually off and I'm waiting until PM session, but I'm just doing this for the sake of the back test as well. I want to see if we are truly still bullish, we need to see an inverse of all of this bearish nature. Boom. Bearish gap has been inversed. What I want to see, I want this inverse fair value gap to be inversed. As you can see, imagine I entered just all the bearish back inversing. I would have been stopped. 2 p.m. Nothing really. Price just chops around, goes lower. And honestly, this right here is a no trade there. Boom. Couldn't have traded this. The only way you could have traded this is, you know, 15-minute gap. Could have traded that as well. 15-minute inverse fair value gap. Immediately swept internal highs, but none of my confluences that I wanted popped up. If your confluences don't pop up, Don't take the trade. Simple as that. Don't take the trade. Follow your rules. It's very simple. All right, let's see. Let's hope we can find another trade. Now this is a new week opening gap. Oh no, it's not. It's the next day, but let's hope we can 10, 11, 12, 1, 2, 3, 4, 5, 6, 7, 8. Okay, 6, 7. We've got new day open, right? Yeah. New daily gap. New day opening gap there. We've got London session low here. Low. We do have a high here. We have a London high as well. Which I kind of like this. I like when price kind of does this where we have both options. When you leave both options of liquidity, it just gives me more of the easier directional bias to create. We also have this 5 minute just here, but it's also kind of like tapped in. Not 5 minute, 1 hour, but let's see. What is the 1 hour is bearish. The 15 minute also seems to look bearish as well. So I will be cautiously bearish. Not married to my bias. So let's see. 920, 925, 930. All right, so we have just swept this internal high, this kind of accumulated high, but we haven't taken out this London high, which is, I feel like, the big dog, right? I don't see any fair value gaps that have been inverse or can be used, except we have this fair value gap being respected here on the 5 minute. As you can see, price looked into it, but it's not much of a confluence. I doubt I would have seen that. Boom, we had the sweep, got a rejection. New day opening gap is my big target. If we were truly bearish down there, but let's see what price decides to do. So boom. Okay. Still looking. We're still looking for opportunities. Don't see any opportunity here. Now here's where I start paying attention. I've seen price now come above this London high again. Right? We've inversed all this bearish nature. I'm pretty sure there's probably like a fair value gap on the 3 minute as well, or some other time frame as well. Like, yeah, this one right here, it's been inversed twice now. Definitely I'll take a stab long. But on the 1 minute, where am I? Above the EMA. Okay, let's take a stab long. What are we going to target? We're going to target the gap. Where's our stop going to be? A little bit under the EMA last swing. You know, almost a 1-to-1. Let's see. Let's see what happens. Follow your rules. Yeah. Yeah. This is what happens. So we're in a mosh pit, right? You're thinking, oh, okay, cool. Looking. We're heading to lunchtime. I'm not taking any trades. And as you can see, this is why I wouldn't take any trades. Look at all this shit. So now we've created a bearish. Now I've come back. I'm coming back right before my PM session, my 1 PM session. All right. Seeing this, boom. Have this created, and it's just going lower. You didn't get any retracement though. Back into it. We respected this fair value gap again. We haven't inversed it. Inversing it definitely would be the. This is an inverse fair value gap now. This right here is a fair value gap that has been inversed. So now let's take a look. What happens on the 1 minute? We swept London high and rejected. Swept it and continued higher. So I want to see price. This is where I'm entering. Where's my stop? This is an A+ trade. Watch. Let's do a 1-to-1. Let's do a 1-to-1. See what happens with 1-to-1. That's why you follow your rules. This is where we took the short, by the way. We took the short here. We had our stop above this high. I didn't even have to have it that high. If I want really, with all due respect, trading 1 mini with a 50K with a $500 target, that's my high. And then this was my target, 2-to-1. This is even more than 2-to-1. My high would have been up here. That's the trade. That's a scalped trade. What time is this? 1:40. PM session. See the difference between this trade and that trade? Two different results. I lost that trade. I didn't follow my rules. I hit this trade because everything aligned. We had a fair value gap from earlier. Seen it get inverse in the 5 minute. Seen it sweep London low. So you're thinking, oh, maybe our plans might be screwed. No, my directional bias is still cautiously bullish. So I'm saying this, we might turn bearish still. We came back on the 1 minute. I see it inverse the fair value gap on the 1 minute reject, and I waited for another candlestick to give me more proof that we're going to stay out of this zone and not bounce out of it again. And then what did I target? A 2-to-1 RR. Why? Because I don't see other liquidity. Obviously, if I was looking, maybe, okay, this could be a liquidity point there. This could be one right here as well, which it hit. These were the liquidity point hits, as you can see. So follow your rules. My rules is I look AM session. I found a trade in the first 30 minutes to an hour of AM session till about 11. If I don't see a trade, I'm coming for PM session. I'm looking for I'm not looking for new gaps to be created. It can happen. It will make my trade even stronger. But obviously PM price might move a little slower. But I'm looking for old gaps to be revisited and see what happens. And this would have been the trade you taken. And look how short the stop loss is. And now I only showed 2 back tests. I'm not counting the one where we didn't take a trade, but that's only 2 back tests. 1 loss, 1 win. And you're thinking, oh, obviously this is not a back testing video, but I'm just giving you guys some extra stuff on the video. Why not? Just to watch. But it's simple. 1 loss, 1 win. You're going to lose. Not every trade is guaranteed. You're not guaranteed to win every trade. The strategy doesn't work 100% of the time. It works 60 to 70% of the time, depending on what grade setup you take. A plus setup, it's working 70% of the time. If I was following 70% of my rules, if I was following 100% of my rules, A plus plus with the SMT, I'm finding a setup maybe twice a week. Follow your rules, but you're still gonna make money regardless. It works. You just have to follow your rules. So I mean that's all for it today. I'm definitely gonna actually make an actual backtesting video where we can actually, But the difference between me and a lot of these gurus and YouTubers is that they already have a preset section of the market when the video is loaded up. They're like, hey, we're gonna backtest this because I know my strategy just worked here. I didn't do that. I continued my backtest exactly from where I left off. If you can see, I already had I already had a backtest that was already working, and I just continued from where it's been. As you see, I've used up most of the days already. I didn't just start this today. I didn't pick a specific day. I started from June, and I said I'm going to backtest continuously. That's why I'm showing you guys transparency. I lost the first trade. Second trade, we won. The second day, we didn't find a trade. Third trade, we won. Following our rules. It's simple. It's efficient. It's efficiency. Hope you guys enjoyed it. I know this was a long one. Try to put as much information as I possibly can for you guys. And I'll see you guys in the next one.